Hello, everyone, and welcome. So today is the day. Today is the day of the fetch. What? Today is when we're going to see what's going to happen. All right. So, what do you need to worry about? Well, I think that first of all, let me give you some shocking statistics about inflation and inflation rate and the urgency of the Fed decision. So, first of all, you need to understand one thing that I know that we're focusing on the 50 versus under 50, but I think that you need to focus on one thing. And the thing that you need to focus on is the Fed has very, um, has been unlikely, has been very rarely as it be able to pull out soft landing. It has unable to be pulled out of soft landing because most of the time, and this is important because we may have a recession on our hands, most of the time that it has tried to, play with the rates in order to fight inflation, which it did. So they raised the rate and inflation went down. But as it raised the rates, it made it difficult for businesses to get involved, and obviously pushed us in a recession like in the 80s. Okay, it happened again in the 90s, except that in the 90s, for the first time, the Federal Reserve under Greenspan was able to, lower the rates enough to fight inflation and to come back. So basically, they raised the rates for inflation, but then brought it back down, but without killing the economy as it was raising the rates for too long. So basically, it did not keep the rates up for too long. But this time, I mean, let's look at the other side of the coin here, because it's important to understand, what's going to happen next. Is uh, this time they raised the rate very fast in a very small amount of time. Did 9 raises in 500 basis points. So now, of course, the people that are on one side, they said, you know what, it's too late, and that includes guys like Fisher, who was a former president of the Fed, right? He said, and he knows his business. He says, you're waiting too long. You should be done. You should have started already. Okay. Now, why has the Fed not started already to lower the rates? Is because from what they're saying, and they data dependent, they're basically telling us that, you know what, I don't have a problem with the economy. We're having a soft landing. So I still want to, and inflation, as you could see, the last numbers, they were a little bit up. I mean, we're not collapsing, but the inflation wasn't so much under control. So basically, we had this situation where the Fed is saying, you know what, I think we're going to be okay in terms of a soft landing, and I still need to fight inflation. Therefore, I'm not going to push the rates all the way down. Okay, so that's the setup. That is the issue. Now, of course, they said though that we're going to cut the rates. Okay, so fine, cut the rates. Um, Now, the Federal Reserve's role in the economy and the significance of upcoming rate cuts is important. I mean, the Fed is technically supposed to make sure that inflation is under control. And now they want to make sure that unemployment is under control. Unemployment went up a little bit, but it's still under control. So everything seems to be under control to that end. What's going to mean for you is as rates are going down, your mortgage is going to be impacted positively. So that's all good, right? Assuming, of course, that we don't have this recession coming in the back of us. That's going to, so what is a challenge? Well, the challenge is that we need to decide whether or not we have a recession or not. So that's one important thing for you, for your job and everything else. But you also need to, and this is what we're here for, really. What are we going to do with the market? How do I make money in this situation like that? What is it that I'm supposed to be doing? Right? Wouldn't you like to know? Well, as far as the stock market is concerned, I always say that the market is like a child. And the child right now doesn't care about anything. It wants its rates cut. It wants rates cut, rate cuts, rate cuts. Not 25. It wants 50, 75, 100. But at the same time, should it get it? Should it get 100? Because look what happened yesterday. We went up in the morning. We were doing great. Had a couple of options, performing very well, and then it collapsed because they realized, you know what? there was a survey that came out, and basically people were saying that it's going to be more of a soft landing. So it doesn't look like we're going to have 50 bips or even higher. It's going to be probably a little measly 25 basis points. So the market got pissed and the market dropped again. So, okay with the rates and your mortgage, uh, okay for now in terms of the recession and your job and things like that. I mean, things should be under control for now. Of course, what the Fed is saying and some of the pundits are saying, and I'm saying too, is that, well, listen, this is different. I know that the Fed was able to manage in 1995 successfully, but that was the only time. But this time is different. This time is different. Why? Well, because really, we don't have. This is not 1999. This is not right. This is not the dot-com bubble. This is not 2008 where we ran out of liquidity. This is not COVID, right? These are the time where we had recessions and really bad time. What do we have here? I mean, I don't know. There's nothing going on right now that is a big concern, except that we're coming off the rate hikes and we want to remove the rates. But what he has to do is lower them, right? Now, of course, I will say that you need to realize that in the future we do have the debt, we do have the national debt that could become a major issue. That is not an easy thing to deal with. But right now we're not talking about that much. The candidates are not talking about this. Nobody wants to hear about it. We're able to refinance more or less okay. So I don't think that's going to be an issue for the time being. Now, could it be an issue later on? Yes, but right now we're okay. So what are you faced with? Well, the climate with the inflation is under control. We seem to have a soft landing, and the Fed is going to lower the rates. So how do you make money in the stock market in something like that? Well, I think you want to hope for that uncertainty today. You would have hoped that they surprise us on the downside. Maybe the Fed could do 75 or 50 bips, and the market might say, "Oh my God!" So there is a recession. Psh, market down, or it might do 25, and the market is going to say, "Really? That's all?" And you're also going to go down. So odds are that the market might actually go down today. So therefore, for something like that, you want to probably hedge yourself with a short dated option, a put option, just in case. Okay, if you've got the stomach for it. I mean, make sure you understand the name, understand how it trades, and everything else. I mean, again, take a look at my Patreon channel to see the type of trades that I'm putting on. Now, of course, today the Fed might decide to do 50 bips, and the market might say, "Yes, this is good because I was thinking you're going to do 25 yesterday. You're doing more than today." And he might even do 75, and they might say, "You know what? Because of what he says, there's no risk of recession. Fantastic. We got our cake and eat it too. We got rates up, no inflation. Everything is perfect." The market starts rocking. Now, where is the market going to start rocking? And that's a question when you have rates that are coming down. This is where we talk about the scenario, um, what we think is going to happen. Well, as the market is gonna drop, I mean, as the rates are going to drop for you, what it means for you is maybe it's time to take a look at small caps. Why? Well, because small caps do better. They do much better with companies that have low amount of with the low interest rates. And frankly, we have been beating up on those poor small caps. Small caps are companies that have less than $2 billion in market cap. So that might be a good bet for you. Now, why not back Nvidia? The thing is, the Magnificent Seven, Nvidia and Apple and things. Yeah, I mean, you're gonna make some money at some point. It's just that it's overdone. I mean, we've done a lot of buying. I mean, the P ratio for these companies are pretty high right now. So what you want to do today, maybe you take a look at something like take a look at, again, my Patreon channel. Look at some of the past videos. I do show you some of the names. I mean, I got Romaco, Miller Industries, Vulcan, Powell, ACM Research, a couple of names that that for me, they're good companies. Take a look at those. I mean, you want companies that are growing. This is for the future. Rates are going to go down. Now, should you be worried about a stock market crash? I don't think so. And I tell you why. Check my video on yesterday on that more in detail. But basically, they don't want a stock market crash, right? The Fed really wants to keep this thing going. Now, if you were to have a market crash, that could give us a recession. But the only reason you're going to get a market crash is because that there was a recession, believe it or not, or the impending recession. But all the Fed has to do is lower the rates, and they say, you know what, it's done. And in fact, I don't know if you noticed, take very close look at what has happened in the past. This is good for you in terms of investing in stocks, believe it or not. If you look in the past, in 1929, when the market collapsed, it stood down for a long time. Go to Yahoo Finance, look at charts. The S&P at that time, no, the Dow. There was no S&P in 1929. Look at the Dow. In 1999, when the S&P collapsed and the Nasdaq, it took several years for the market to recover because we're used to market collapsing and coming back up. Hold on, that wasn't always the case. Then in 2008, it also did that. It took a little less year, but it took a few years. Look what happened with 2020 with COVID. That thing collapsed and went back up. So technically speaking, I mean, even if the market drops, it go back up again, which is fantastic for us. For those of us that want to take advantage of the volatility, you just wait here and you just wait there. The market collapse, you make money. The market goes up, you make money. Now, of course, not at the same time, but like this. What's wrong with that? You could do this all day. You want that volatility. Now, of course, we're saying, oh, the VIX is going up. Be careful. There's going to be a problem. Well, I don't know. Maybe it goes up one day, it goes down another day. You want the volatility. One thing you don't want is this, because then you get killed with options. Now, with stocks, then what you do is you pick very good stocks, small company stocks, low P ratios, growth. Now is the time because the market is like this. Because once it starts taking off, then of course everybody's going to be buying because everybody else is buying. And the last thing you want to do is buy when everybody else is buying, right? You should be selling at that time. And I mean everyone. I'm not just saying, some volume. I'm talking about you have a lot of people buying. Because at the end of the day, when one thing we don't do is we're trying to predict anything. And we listen to people telling us this is what's going to happen. And then this is going to happen. Listen, if they knew this was going to happen, they wouldn't be doing it. When we hear all the pundit on social media and on the videos and on the networks, right? I mean, you hear them talking, right? Like I said all the time, why are they telling you these things? Why are they being so nice to tell you what's in their portfolio? Well, because obviously they want you to buy the stock that's in their portfolio so that if you buy enough of you buy, then obviously it goes up. Why do you think all these people tell you all the time, oh my God, we may have a recession, things are going to get bad, we're going to get killed? Because they want you to look at it because it's bad news. There's not going to be a stock market crash, right? They don't want it. And if there is one, it's going to recover very quickly. They don't want it. One thing they want to keep off the ball is they don't want you to take a look at the national debt that is at $35 trillion. That is a problem. That is something to worry about. But right now, they're being able to push it and push it. Now, of course, when it gets to $56 trillion, at some point, this cannot be repaid, right? So that means you're going to have to default on that debt. There's no other way. Or you're going to have to retire at 70 years old, like they're doing in Italy, or you're going to have to get less retirement money. So more of a reason why you should start planning now to make sure you got that on the side, right? You need that FU money. You need to think about these things because that's going to happen at some point, not today, not tomorrow, but at some point. Now, at some point, meaning that when they can't really pay down the debt, pay down, or we have a revolution because they want to increase the retirement age to 70, like in Italy. So, I mean, these are real issues. That's a problem. That is something that I'm concerned about. I don't know when it's going to hit. So, as I always say in your portfolio, you want to hedge. You want to hedge against all possibility. Now, when I take a look at what's happening right now, we could see that U.S. mortgage rates dropped to 2-year low ahead of the Fed cuts. It's happening already. So this is good for you. This is good. Mortgages are going to drop. Then we also have the fact that U.S. futures are hedging higher in a watchful mood before the Fed market. But then again, that happened yesterday. The futures were going up. Everybody looked to be very happy. It was going up and up and up. And then when there were talks, so imagine just talks of a potential that we're going to have a soft landing, bam, this thing went down. This is a very, 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 it's a child, right? It's a very temperamental situation. So you got to be very careful. Now, of course, if you're in for the long term, then you shouldn't care. Well, yeah, but if you want to make money in the stock market, you kind of have to do it, as on a short-term basis, especially in these times of volatility. Of course, you need to understand what you're doing. This is not for everyone, like I always said, right? This is not for everyone because you need to know what you're buying. Well, you need to know the instrument that you're buying. If you're buying an option, a call option, that basically where you profit from the stock going up, you know, it's pretty good because if the stock, what I've seen, if you look at this is what, September, if you look at a 3 months, 4 months expiry option, like in December, if the stock goes up by 1%, the option will go up by 6 to 7%. So we're talking 6 to 7 times leverage. So if that thing goes up by, the stock goes up by 10%, your option could be up 70% in one day. Something to think about. Now, of course, hold on, hold on. You have to understand that if it doesn't happen today and you say, well, it's going to happen tomorrow, and you wait tomorrow, it's not going to happen tomorrow. It's going to depend. The closer you get to that maturity date of the option, which is usually, December 20th or October 20th or whatever, then it expires worthless. Then you lose everything. Well, what do you think? You're getting 7 times your money for nothing? Of course, there's another way of doing it is you go for what people haven't been buying, right? And what haven't people been buying? They have not been buying small caps. Why? Well, look at the options. We look at the P ratio for small caps. Look at the Russell 2000. It's around, the P ratio is 10. People are willing to spend $10 to $12 for their earnings. Well, investors are spending almost $35. If I'm looking at the P ratio, the Schiller P ratio, $35 for each dollars of earning of the S&P. Why am I spending $35 on these guys and $1? Because when we say the S&P, we're only talking about 7 stocks, right? The Magnificent Seven, Apple and Nvidia. That, I think, we're done for the time being. Look at the small stocks. Some of them are done quite well. What else is happening? Well, we have basically we're looking good right now. Everything seems to be positive. Is there very negative news? Oil pulls back with rise in crude inventory offsetting Middle East tension. Well, not to break the party here, but if oil prices are coming down, oil is driven not by the supply but by the demand, right? It's not like I'm going to raise oil by reducing the supply. No, the way it goes down is because people don't want it. So whenever oil goes down, it means that there's less need for oil, which means there's less need for economic activities. I mean, don't read a recession into it, but obviously that's a sign. I mean, don't forget, there is a sign. The fact that there's the Fed has never pulled a fast one where they get away with it by basically saying that we're not gonna have a recession. I'm gonna have my cake and eat it too. I was able to raise the rate. I killed inflation. I did not create any recession. But now that I'm done, I'm going to lower it because I don't need to be that high. Now, I'm not going to bring it down to zero. I'm going to bring lower it to a point where I want to have around 2% of inflation, which they're almost there. And they're therefore, so to allow mortgages rates to go back and investment for small companies and things like that. And I'm going to do it not because I'm concerned about the inflation, but I'm concerned there's no need to keep it that high because you could create recession really if you keep that high, and I'm able to do it. So I was able to put it off. Look at me. Yeah, I mean, if that happens, they're going to put a plaque of him in Washington D.C. because no one has ever pulled something like that. Is it going to happen? Is it not going to happen? It doesn't really matter. The reason it doesn't matter is because you're not looking at reality. None of this is real in a sense that you don't really know what's happening in the economy. Yeah, you get some numbers, you get some numbers, you get some unemployment numbers, you get some payroll numbers, blah, 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 blah. But the actual situation on the ground, you do not know. In fact, the numbers that you're seeing sometimes are incorrect. So we're making decision really on information and feelings, and so we're all over the place with this thing. So I mean, it's good if you want to benefit. I mean, I love it because it creates, I'm here, I make money on both ways. But it is uncertain. If you're not out there to make a buck in the stock market and you have a job, for example, right? You say, I'm going to lose my job. This thing's going to happen. Well, I know you had 4% unemployment, so we're still okay. But the point is, can they pull it off? Um, I don't know what's in his mind. Don't forget, there's also an election, right? If you're Biden and you're sitting behind the Fed, the Fed's desk, and you say, "Listen, guys, if you're gonna send a signal that we are in a recession, that's not going to be good for us, for the Democrats. So if you could make, do in such a way that this looks very good for us, meaning that you don't need to lower the rates that much because we're great. So then our people will use this and say, look, see, the Fed only 25 basis points, we don't have a problem. Does this come into play in the mind of the Fed? Technically, no. They're supposed to be independent from the administration, but that is not true. In the 70s, Nixon had his Fed chairman in his pocket. The guy was doing everything he wanted to do. It was the worst chairman ever. So, what is the Fed thinking? Maybe if the Fed think that I think that Republicans are going to win. So maybe what I should do is don't do anything. Keep the rate high. Because if I keep the rate high and there is a recession coming up, that's going to make it even worse on them. Who knows what they're thinking? Now don't forget, within the Fed, within the Fed, it is contentious. Some of them, there's a camp that's saying, we got to do something, and the camp that's saying it's fine. It's nothing is going to happen for the time being. So we shall see. Now, right now, when you look at what's happening, the futures trade water as investor brace for Fed rate cut. When I see something like that, I'm a bit concerned because that means there's a lot of pent up expectation. How do you know what all these people are thinking? How do you know what the market is thinking right now? But it could be important because if the market for some reason is saying, if we get 25, I am going to be very disappointed. So therefore, the market is going to collapse. If the market for some reason thinks that, this is perfect because we don't think there's going to be a recession. So therefore, 25 is going to match, then it's okay. How do you know what these people are thinking? You could be listening to me. You're going to be listening to all these people telling you 50, 25, 50, 25, recession, the recession. But what do you do? What do you decide? You have to make up your own mind. But it's a lot easier to get a feel. And this is what this channel is about, right? This channel is about education. Educate yourself first to find out, first of all, if you want to be in this game. Educate yourself to find out, okay, well, I'm not in this game, but I want to know, is it time for me to move? Is it time for me to buy a house? Should I wait to buy a house? Well, in that case, you should wait because rates are going to come down. It depends where you're playing. But at the end of the day, this is about education. So don't forget to subscribe to this channel because every single day I am going to tell you what I think is happening and educate you because this thing is and I'm educating myself, quite frankly. It's not I know everything. It's just I learn every day with you as to what's going on. And my goal is to make sure that you understand what's happening, that you make the right decision, that you are empowered. Education is the most powerful thing. Now, I'm not going to tell you you're going to become a millionaire by tomorrow morning because that, frankly, you would have been already, and it's not going to happen. And first of all, I mean, how much money do you need, quite frankly? Let's see if there are any more news apart from that. Otherwise, we should conclude. And the way I'm going to conclude with you today, I will say this. Well, first of all, realize that this is a quasi science. realize that no one knows what's going to happen in the market. Once you understand that, then you need to look over and get a feel for the direction, not of what's really happening, like, do we have a recession? No, 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 no. You want to think about, what are these people doing? Is there mass confusion outside? It's like, like the Walking Dead. The door is closed. You hear all that noise outside. Do you want to go out right now? Probably not. It's calm. You go out, right? So basically, you want to get a feel for what's happening, and that is easier to do. Like, is it mass confusion? Well, if it's mass confusion, then you take advantage of the mass confusion by being short or long the market at the same time, because if there's mass confusion, you're going to hit it both ways. If you know for a fact, and I think we kind of know, that rates are going to go down, that's going to benefit the small caps. So that's what you should be looking at. Look at the small cap. That kind of big picture kind of thing. Okay. So I encourage you to leave comments. Let me know what's going on. Let me know what you're thinking. Let's have a discussion. Obviously, if you want to know more about what I do, I mean, I gotta get paid. Nothing is for free. Join my Patreon channel. It's free for the first week, and then it's only $5 a month, and you're gonna see all of my trades. Okay. So thank you very much, and we shall see you on the trading floor.